Today we'll be taking another look at Cardano, performing some technical analysis and making some price predictions on where we can expect to see the coin go in the near future. Let's take a look. How's it going, guys? Ryan here and welcome back to another crypto video, and today we're taking another look at ADA Coin, also known as Cardano, performing our usual technical analysis and making some predictions as to where we can see the price go basically in the next few weeks and months. But before we get started on that, guys, remember to leave a thumbs up if you do enjoy today's video, and if you want to see more of this sort of content, subscribe to the channel and turn on bell notifications. We cover crypto, investing, stocks and wealth management. I'd also love to know your thoughts down in the comments section below on Cardano overall and the ADA coin, which we'll be taking a look at today. But without further ado, let's get straight into today's video. Welcome into CoinSpot, guys. If you want to buy any sort of crypto, including Cardano, ADA coin, then there is a link down in the description of this video. But let's take a look at the Cardano chart. And since we last looked at it, which was on the, I believe, 3rd of July, so a couple of weeks ago, we've unfortunately seen the coin deteriorate a bit in value. So this is a third right about here. We were looking at roughly this point, and you can see we've moved in a downwards direction. I'm just going to swap to the daily just so we can get a bit of a better idea exactly as to where the coin has gone. You can see I'll just chuck a line in on the 3rd of July. This is where we saw the coin in the previous video, and that's what's happened since that point. We're now sitting at $1.67 Australian. In the last video we were sitting roughly at $1.90, so a deterioration of almost, I suppose, 20 odd cents, but not all is lost. We've just seen a bounce off a critical support point, and I'm just going to plug that one in for you guys to see. And the reason this is a critical support point is just due to the sheer amount of price action that has occurred at this value in the past. You can see all the way along here we've had plenty of price action occurring at this critical support point, which is at roughly $1.60, and more recently we've seen this point be touched, and it has been breached, yes, but recovery occurred either within the day or the following day, so that's alright. But what we're seeing right now is that this point has just been used as a point to bounce off for our price. So we saw yesterday that the coin bounced off $1.60 and has started trending back upwards. So what does that mean? Well, I couldn't call it a double bottom. Now, and the reason I'm saying I can't call it a double bottom is purely due to the fact that we've got lots and lots and lots of, I suppose, decrease underneath that point. If it was a double bottom, we would have seen it bounce off this point and then bounce off this point again, which is a typical reversal pattern that we see. Although in saying that, it is clear that we have received a bounce and support has been held, which is great news, and you can see we're sitting at the top end of today's candle, which is always good. Something that is quite interesting, I don't know if this is a glitch in the chart or what, but it looks like over the past few days, volume has just completely dropped off, which I suppose in a sense is, if it is real, is a good thing, because it indicates that the selling that has occurred isn't because of people dumping their coins. It is purely due to the fact that there is not enough volume on there and there's not enough buyers coming in, so that's not too bad. We have seen the crypto market over the past week once again take another little bit of a slump. I thought we might have been seeing some recovery here when we last looked at it, and it did look that way the following day, but unfortunately it did not eventuate. Our most recent high was at roughly $2.05, and yes, we are now sitting at roughly $1.67, so that's sort of, I think, where we are at this point in time. So using that peak, I suppose, as a short-term trend, let's try and chuck in a point at which I suppose we can see what is going on from a consolidation perspective. We've got a little bit of a triangle forming here. Let's just extend that out. So I expect to see a few things occur here. The first of which is this now acts as a resistance line at the top, and based on today it's currently sitting at $1.78 and we're seeing at $1.67, so about 10 cents from the peak, but I'm expecting we're going to go through and we've bounced, and we're going to bounce off that point probably at about $1.75, and then either one of two things is going to occur. We're going to bounce back down and go back to the support point and start consolidating right into this tight spot here, or we're going to potentially see a breach in that sort of sense, which would mean we're going for our next key point, which is our previous high at about $2.05. So there, I think the two expectations we can put in place. I'll just put in our critical support point below this point, which is, let's just zoom out slightly. There we go. You can see plenty of price action. It's at roughly, I'd say, $1.40. So let's just chuck that in there. $1.40 if we do breach our current support at $1.60. I hope that doesn't occur, but it could be the case. Then the target would be, if we did manage to get through this trend line, chuck that one in there, $2.05 roughly. So that would be, I suppose, the target if this line here was breached. Now, something that is interesting is we've actually as well bounced off the long-term uptrend, which is obviously good news. So I'm going to plug this one in here for us. You can see our long-term uptrend coming in from, back in the early days of this year, where we start really making a move, and we're moving, and this is where we're sitting at right now. So this cannot be breached. Now that then modifies our scenario here slightly, in the sense that I think we're potentially going to see this act as a major support point, and we're going to keep moving in that style of direction. I do expect that our target, which is sitting at $2.05, will be well on its way, just given that this is occurring. And you can see that, I suppose, we are still trending upwards, which is positive, but obviously it's very, very critical that we don't see this breached. Now, let's just bring in a few more lines to make things, a bit more interesting. First of which, we'll bring in our moving averages. So we'll bring in 3 of them, the ones we always like to use: the 20-day moving average. We'll bring in the 50-day moving average, we'll make that one red. And then finally, the purple one will be our 200-day moving average. Our 200-day moving average is actually just trending below this trend line at the moment, and it's sitting at $1.52. Our 50-day trend is sitting at $1.93, and our moving average for our 20 days sitting at $1.82 roughly. So you can see, I suppose we're in between all of them at the moment. We could see some convergence, we could see some divergence. Obviously, I think what we're going to see is the 200-day is not going to come into play in this sense, because we're still above the trend line, which is good. The only way for that to come into play is if it's breached. The target, I suppose, is for our 20-day to cross the 50-day. They're very close at the moment, and you can see a death cross obviously did occur here, with the 20-day moving below the 50-day previously, which is why we've continued to trend in this sort of direction. But I think with what's going on, if there's a bit more buying pressure and we can breach this line right here and move through, I really do think that this could result in a golden cross, with the 20-day crossing back above the 50-day moving average. Very positive if it does occur. Let's just get rid of a few of these, and now let's just chuck in the MACD, moving average convergence divergence, and you can see that this is sort of what looks like is going to happen. We can see that it's just started dropping off from the sell side, and we're starting to gain a bit more momentum. Hopefully we do then see this shorter term moving average cross through the longer term, and we start moving in upwards direction. Now we'll probably see that within the next couple of days, so keep an eye on that. It's going to be a major thing for us in recovering as an overall coin, but a lot of this, as I always say, is due to relying on, I suppose, the overall crypto market, unfortunately. Let's bring in one more relative strength index, and I think I can expect to see, we're sitting at the bottom. There's been a lot of selling that's gone on. We're still within the 30 to 70 point band, but we're currently sitting at about 40 points. So we're at the lower end of the RSI. So we've got plenty of room to move upwards and start trending in a positive direction. I really think we will see a breach of this line within the next few days. This downtrend, short-term downtrend line here, the top end, which is basically acting as our resistance, and the target for us is to hit that $2.05 as a critical point. If you enjoyed today's analysis, please remember to leave a thumbs up. It really helps me out so much. And if you are an ADA holder, make sure you let us know down in the comments section below. If you're wanting to see more of this sort of content, hit subscribe, join the channel, turn on alerts so you get all the latest videos as soon as they come out. We cover crypto, investing, stocks, and wealth management in general. But without further ado, I'll leave it there, guys. I hope you have an awesome day. I'll see you next time. Cheers.